Hello and welcome back to Cryptollennium. Safe to say today's been quite an eventful day. Bitcoin reaches new all-time lows within this cycle. Binance pulls out of the FTX deal, and much more. So without further ado, please like and subscribe and let's get into this nitty-gritty. So I'm sure you've heard Bitcoin hits lowest price in 2 years as Binance cancels FTX acquisition. Cryptocurrency prices fell across the board in Thursday morning trading in Asia as Binance Global, the world's largest crypto exchange, said it was backing out of a deal to acquire struggling rival exchange FTX just 24 hours after making the offer, leaving FTX facing collapse if no other buyers emerge. Binance tweeted Thursday morning as a result of corporate due diligence, as well as the latest news and reports regarding mishandled customer information and funds and alleged U.S. agency investigations, we have decided that we will not pursue the potential acquisition of FTX.com. Now, this is the tweet, and it goes into some detail. In the beginning, our hope was to be able to support FTX's customers to provide liquidity, but the issues are beyond our control or ability to help. Every time a major player in the industry falls, retail consumers will suffer. We have seen over the last several years that the crypto ecosystem is becoming more resilient, and we believe in time that outliers that misuse users' funds will be weeded out by the free market. As regulatory frameworks are developed and as industry continues to evolve towards greater decentralization, the ecosystem will grow stronger. Now, this comes after they made an announcement of showing proof of reserves, and this prompted many other exchanges such as KuCoin and other small exchanges to announce that they'll be doing proof of reserves as well, and this just goes back to situations such as FTX, Three Arrows Capital, Luna, and so on and so forth, gaining customer confidence or consumer confidence. And I think this is what we need. Comment below if you think otherwise. Now, Binance cites these discoveries during due diligence, and I could assume that we all really could have seen this one coming. The Wall Street Journal reported that the potential of Binance doing any deal with FTX is completely off. And this was due to the discoveries that they found, and there were serious concerns about the financial health of the FTX network. Now, not as much worried about FTX as their consumers. There's a lot of retail investors that use centralized exchanges, and hopefully their funds are safe. The regulatory troubles likely to face the exchange and its CEO, Sam Bankman-Fried, are also among the factors considered when making this decision, the Binance spokesperson said. Earlier today, Brian Armstrong, the CEO of Coinbase, commented on the FTX situation, especially about the planned exchange purchase by Binance. Mr. Armstrong highlighted that even with Binance's support, Sam Bankman-Fried's credibility would remain ruined. Now, this reminds me of Do Kwon. He might become Do Kwon 2.0, if you will. Another thing to keep in mind is this morning, Meta announced that they're going to be laying off about 11,000 employees, or 13% of their job force, indicating that the Fed's rate hikes and the market squeeze is starting to show. Now, if we check out FTX, we'll see that we have this message right here. FTX is currently unable to process withdrawals. We strongly advise against depositing. This is not something you want to see in crypto. And so hopefully they get things figured out, because otherwise this could hurt the industry in tremendous ways. In other news, the S&P 500 falls below key levels on elections. Tesla, Bitcoin, CPI inflation report looms. And I don't know if everybody knows, but tomorrow we get those CPI inflation numbers. and we'll get a glimpse of how the Fed is doing with their rate hikes on the effect of inflation. Hopefully, core inflation, arguably a more important metric when it comes to measuring inflation, is down, because last time it was reported, it actually went up a little bit. So Dow Jones futures rose slightly overnight, along with the S&P 500 futures and NASDAQ futures after a tough day for the S&P 500 and stock market rally. All eyes will turn to the October CPI inflation report tomorrow morning, or Thursday morning Pacific time, about 11 o'clock, I believe. It might be 2 o'clock Eastern time, but don't quote me on that. The stock market rally lost ground Wednesday, with the S&P 500 back below its 50-day moving average. Mixed election results, Bitcoin's continued woes, renewed China lockdowns, and the looming consumer price index were possible contributors. Bitcoin plunged to fresh two-year lows, as we showed earlier. And mega caps did not help. Tesla plunged below key levels, as well as other major players such as Amazon, Apple, Google, and Microsoft, or I should say Google's parent company, Alphabet. And these were the worst closes since June for Apple and Amazon. And I don't know if everybody remembers, June was the initial all-time low of Bitcoin during this market cycle, where it went down to 17,500. We just blew the floor out of the ground. So with the CPI inflation report coming up, it's fair to say everyone is on the edge of their seat. The October Consumer Price Index will be released at 8:30 a.m. Eastern Time on Thursday. So about 5:30 a.m. Pacific Time, US. Economists expect the CPI inflation report to show prices rose 0.7% in September versus September. Core CPI, which excludes food and energy, should climb 0.5%. And now what I think is what we're seeing is the market adjusting prior to these numbers coming out. So these are all assumptions. The market is forward looking, as we all know. And with that said, hopefully the numbers don't come out worse and we see a potential rally. The annual CPI inflation rate should dip to 8% from September's 8.2%. Core inflation is seen holding steady at 6.6%, which was its high last time it was reported. The Federal Reserve wants to see clear and convincing evidence of inflation slowing before ending rate hikes. Markets are slightly leaning towards a 50 basis point Fed rate hike in December, but there's still a strong chance of a fifth straight 75-point move, which would take us to 4.75% for the Fed funds rate, arguably higher than we've seen in this decade. The November employment data and CPI report will be released before the December Fed meeting and announcement. Dow Jones futures today, and we only mention this on our page because we see a strong correlation with the crypto market, especially Bitcoin, to traditional equity markets, including the Dow Jones, NASDAQ, S&P 500, so on and so forth, with a negative correlation to the US dollar. Dow Jones futures were up 0.1% versus fair value. S&P 500 futures rose 0.1% as well, and the NASDAQ 100 futures climbed 0.3%. The 10-year Treasury yield sank 8 basis points to 4.07%. Bitcoin traded slightly above 16,000, still near Wednesday afternoon's 2-year lows of 15,000, upper 15,000s. Remember that overnight action in Dow Jones futures and elsewhere don't necessarily translate to actual trading in the next regular stock market sessions. So be sure to hold on tight and don't move too quick. Now, some people are thinking there's going to be a rally coming up, but the stock market rally opened mixed Wednesday, but then lost ground, especially in the afternoon, closing at session lows. Dow Jones Industrial Average tumbled nearly 2% in Wednesday's stock market trading. The S&P 500 fell 2.1%, and Nasdaq complete composite skidded 2.5%. Small cap Russell 2000 slumped 2.7%, and the 10-year Treasury yield rose 2 basis points to 4.15%. Now, we want to see this 10-year Treasury yield go up more, and I'll show you why in the next video. Because Treasury yields, there is a curve, and when you have 2, 5, 7, 10-year yields, you would expect that the 2 would be lower than the 5-year yield, and the 5-year yield would be lower than the 10-year yield. But currently, we're seeing an inversion. Now, this inversion is strongly correlated to recessions, major recessions. So to see this come up is actually good news for us equity or risk-on traders and those of us strongly tied to the cryptocurrency market. The dollar had a strong session following a big decline over 3 days, which is also good news for us because I'm assuming the dollar rallied during this Bitcoin dip, during this equities dip. And as Bitcoin recovers back above $16,000, it kind of puts the US dollar back in its place, bringing it right back down to those levels that we want to see. U.S. crude oil prices slumped 3.5% to $85 a barrel. Weekly U.S. crude oil inventories rose the most in a month. Meanwhile, China lockdowns raised concerns about crude demand there. U.S. natural gas futures retreated 4.5%. Now, we all know Bitcoin plunged to a low of $15,554, the worst in 2 years. Other major cryptos, such as ETH, also continued to sell off, along with crypto-related stocks. In other news, miscellaneous, Asian stocks fell. Crypto bounces before CPI numbers in the morning, which is in a few hours now, and markets wrap. Bloomberg, Asian stocks weakened after U.S. shares fell and cryptocurrencies arrested a sharp decline that sapped risk appetite ahead of crucial inflation data due later Thursday. Shares in Japan, China, and Australia fell. U.S. equity futures inched higher after the S&P 500 slumped Wednesday to the end of a 3-day advance. Earnings from Walt Disney Co., News Corp, and News Corp disappointed, so earnings reports had something to do with today's dip, but not nearly as much as what was going on with the two crypto bros, CZ and Sam Bankman-Fried. The dollar treaded water after Wednesday rally, and bond yields fell in Australia and New Zealand following treasuries. Bitcoin climbed above 16,000, and we can see that now. It's at about $16,365. Just to make sure you guys can see that. And so to continue, this was the biggest margin, or biggest tumble, or since March of 2020. And if you don't know what happened March 2020, that is the COVID drop, where Bitcoin fell from around 14,000 all the way down to $3,000 before rallying all the way back up and initiating what we saw as the bull run of 2021. Bitcoin hit $64,000, and arguably that was the peak compared to the other, just because of relative strength indices. Now, as Binance scrapped plans to acquire embattled exchange FTX.com, we knew that, which may face bankruptcy. And I don't know if you've heard this, but Sam Bankman-Fried has also lost 94% of his net worth following these developments. The action pressured shares in Asian companies related to cryptocurrencies after their U.S. peers fell sharply. Now, Asia has a strong hand in the crypto market. Some might say more than we even know. U.S. voters delivered a mixed verdict in midterm elections. Republicans headed for control of the House by smaller margins than forecast, while the race for the Senate continued. A divided Congress would likely block further bold fiscal moves. Mark Hayfel, Chief Investment Officer at UBS Global Wealth Management, said in a note, "For markets, however, Federal Reserve policy rather than fiscal policy will remain the main driver. October inflation data will offer clues on the path of the Fed tightening." JP Morgan, Chase & Co. analysts said that a hot print could send U.S. stocks 6% lower in Thursday trade. So gear up, put your seatbelts on, because we might dip one more time on this roller coaster. Oil traded flat after its worst day in nearly a month as U.S. stockpiles grew and COVID outbreaks in China threatened growth. Key events to expect this week: U.S. CPI numbers, just a few more hours. U.S. initial jobless claims, that's also in a few hours. Now, we want this jobless claims to go up. If the Fed sees unemployment is going up, they'll believe that what they're doing is working, and they will be, hopefully, less hawkish or less aggressive to fighting this inflation. Fed officials Lori Logan, Esther George, Loretta Mester speak at events on Thursday as well. U.S. University of Michigan Consumer Sentiment, Friday stocks, and that's going to be on Friday. Futures on the S&P 500 rose 0.1% as of 12:29 p.m. Tokyo time. The S&P 500 fell 2.1%. And a whole lot more on traditional markets. Now, cryptocurrencies, we're going to keep our eyes peeled for that. Bonds, this was important. So 10-year treasuries declined 1 basis point to 4.08. And Australia's 10-year yield also declined. We want to see this hopefully better. Now, without further ado, let's take a look at some charts and we'll wrap this all up. Bitcoin is currently trading at $16,430, looking real strong on the 4-hour chart, with a potential aggressive bounce back coming after such a strong sell-off. On the day trend, we don't really see the healing quite yet, but hopefully in a few hours we will see a solid close. You can see that we went significantly oversold on that RSI, similar to the June sell-off. So hopefully that is the pain that we were waiting for. Similarly, we can take a look at ETH, which is currently trading at $1,175. Pretty good buy if you know what is in the works for Ethereum. Also coming back aggressively on the 4-hour chart. Hopefully it maintains this momentum. On the day chart, let's take a look. I would assume there's no strong indication of where it's going, just because Bitcoin hasn't really made up its mind yet. But while that loads, we'll take a look at some other currencies. Solana, drastic drop. Currently, it's trading at a slight bounce of about 7% from the low that it met today. And I believe that low was $12.37. Whereas yesterday, or a few days ago, I guess, let's just go with yesterday. Yesterday we traded at closer to $20 to $30, and that is quite the decline, a 50% drop in one day. Now, if you're not aware of why this is, it's because FTX has strong ties with Solana-based protocols. Sam Bankman-Fried has also been a part of many of these protocols as a founder and as an investor. So, with one goes the other. And I think that's probably the main reason that Binance did not want to touch FTX with a 10-foot pole once it realized what sort of heat they have on them currently. ADA, or Cardano, actually reached a new low for its current cycle today as well, reaching a low of about $31 and some change, or 31 flat, or 31 cents, excuse me. Bouncing back real aggressively. It's almost up 10% in the last few hours. And hopefully we can see some major recovery as, the Vasil hard fork in September. And big announcements coming by Charles Hoskinson and the whole Cardano team sometime mid to late November. Hopefully it's something that the cryptocurrency industry could use as a win. As far as ETH goes, also bouncing back quite well, but as you can see, not really certain if we've stopped feeling the pain on the day trend. It's likely that the MACD will show that the sell-off is losing its momentum and we will be bouncing back, hopefully back up to, this good support level of around 1250 to 1350. Now, finally, I just want to wrap this up with one thing that I like to pay attention to, and that is Bitcoin dominance. Now, if you don't know what this is, Bitcoin dominance is a measure of all the funds in the cryptocurrency market that are tied to Bitcoin versus the rest of the market, or otherwise known as Bitcoin dominance. How much of the cryptocurrency market cap is held in the original, the OG Bitcoin? Currently, we're looking at about 40% of the entire cryptocurrency market cap in Bitcoin, meaning its dominance is, we could see it's pretty low still. What that means is funds are spread around in a way that Bitcoin dominance is lower. If we take a look here, though, you can see that Bitcoin dominance spiked first week in November and parts of October. Now, what we saw with this, and you can go all the way back to mid-October, it's significantly higher than what it is right now. We saw most of our favorite altcoins, the small cap altcoins, bottom out here for their current cycle, or bottom out completely if this is their first cycle, which I have a few favorites that, I did witness. So a bit of a warning, and this is not financial advice, but if you were to take any financial advice, this would be it. Keep an eye out on Bitcoin dominance as we proceed over the next few weeks, because if you see this going up, it is likely. So if you see this going up and the Fed has not pivoted yet, it is likely that funds from the rest of the cryptocurrency market cap will go back into Bitcoin and stablecoins. Now, Bitcoin dominance used to be much, much higher, but with the evolution of crypto, stablecoins, staking platforms, so on and so forth, there is a lot of reason as to why this has been chiseled down quite a bit. But still keep an eye out on these levels, because as Bitcoin even reaches 41%, 41 to 42% dominance, you will see your favorite altcoins drain a little bit more, especially if they're on the downswing. If they're losing that momentum that they have from the bounce back, it's likely you will see an all-time low in the coming weeks for your favorite altcoins. So gear up, get your bag ready, and let's have some fun. Thanks for tuning in. Cryptollennium signing out. We will catch you guys in tomorrow's episode.